that is in green this afternoon, that's OPEC basket. That spec is the only one in green, 0.21% in positive. Now let's go to our first conversation. Again, we are staying with the Tax Administration Act. President Bola Tinubu on Thursday signed 4 new tax laws aimed at modernizing and streamlining the country's tax system. In the new tax law, the value-added tax remains at 7.5%, despite initial proposals to increase to 12.5%. But its scope is expanded. Essential items such as food, education, health, public transport, residential rent, and exports are zero-rated to ease inflationary pressure. For revenue allocation is restructured. Now 30% of VAT proceeds are distributed based on consumption rather than contribution. 50% equally among states and 20% to population-based allocation. Anyways, let's get to the details of this document before I introduce my guest. The Nigerian Tax Administration Act provides harmonized legal operational structure for tax administration to foster efficiency, uniformity in tax collection. That is very key. The Nigerian Tax Act, this consolidates Nigeria's fragmented tax status into a unified legal framework and to reduce tax duplication and ease compliance for taxpayers. The Joint Revenue Board Act now sets up a national governance structure to coordinate tax efforts across all tiers of government and introduce tax appeal tribunals, office of the tax ombudsman. This is also very, very important and key, talking about resolving disputes coming up from businesses and, of course, help improve investors' confidence in our country. Now, the Nigerian Revenue Service Tax Law repeals the FIRS Act and paves way for establishment of Nigerian Revenue Service. Clearly, that's what that stipulates. Well, that's it. But my guest is the managing consultant, Christian Pedabo, Mr. Albert Folorenshaw. He will break this down for us bit by bit today on the show. Good afternoon. Thank you so much for starting the week with us on Business Nigeria.
Thank you for having me, Tolu.
Yes.
Pleasure being here again.
All right there. Thank you for coming into our studios.
Thank you.
Well, I think, like I said in my introduction, that this act completely overhauls Nigeria's tax landscape, driving economic growth and, of course, revenue generation. Can you help us understand these positives as it relates to each of the acts?
Okay, thank you very much. Like you said, you already mentioned the acts, and it's very important that we understand the context. And the most important thing is the fact that the tax laws that we used to have,
yes,
you know, in several laws, some of them are cake, some of them fragmented, but, you know, it has now been put into 4 buckets. If you start with the Joint Revenue Board Establishment Act, this is the act that covers, you know, that covers the whole tax authorities. That is the state and the federal, the Nigerian Revenue Service, which means it's supposed to coordinate all the tax issues, advise government on various tax issues. The membership cut across all the states and is headed by the executive chairman of the Nigerian Revenue Service. Majorly covers the Tax Appeal Tribunal, which is available to all tax authorities now, not only to the Nigerian Revenue Service. States can take their cases to the Tax Appeal Tribunal, okay, which is close to a court. Then you mentioned the tax ombuds,
yes, okay,
which is a new introduction, also available to all tax authorities, both the one at the federal level, the one at the state level. And of course, their function is majorly to provide an alternative dispute resolution opportunity for those who cannot afford to go to the tribunal or not to even talk about going to court. They serve as the first opportunity for taxpayers to approach for taxpayers to resolve their issues. Of course, normally what happens is that where there is a dispute between the tax authority will issue a letter to the taxpayer to say that, well, this is my final position. And if you cannot go to court, then you have to just raise money and pay. But now you can first approach the tax ombudsman, who can take up the case. They can even go to court on your behalf if there is a need. They can get involved in investigation. They can investigate the tax authorities as well to ensure that the dispute, is resolved in a manner that is favorable, majorly to the taxpayer. So that is contained in the Joint Revenue Establishment Act. The next one to that is the Nigerian Revenue Service Establishment Act. That is focused mainly on the National Revenue Service, which means those ones that collect tax for the federation. Okay. The name change is majorly to establish or to emphasize the fact that the FRA that we used to have, which people thought was collecting taxes for only the federal, for the federal government, is not correct. So they actually collect for the federation, and so the name Nigerian Revenue Service. Captures that, and of course is majorly to provide ways of collecting all those taxes for the federation. And then we have the Nigerian Tax Administration Establishment Act. Yes. Okay, that gives the basis on which taxes are to be paid. Okay, it also provides the basis for the establishment of the State Internal Revenue Service and of course the Local Government Revenue Service. That has to be made because that is still under the purview of the National Assembly to promulgate laws that can be applied in all the states. So each state can now, on the basis of that provision for state and local government, set up their own or expand or make it more functional the way they want. But there is already a basis set by the establishment in this act of the State Internal Revenue Service, and of course majorly covers administration, what taxes, who collect what taxes, when returns are to be filed, where do you file the returns, if you have issues, which tax authority covers what. All of those are contained in the administration. Then of course we have the major one, which is the Nigerian Tax Act. The Nigerian Tax Act, encompasses all the tax obligations, all the tax that individuals, companies are supposed to pay. Okay, we used to have them all over the place. We have the major one is the income tax. Income tax as in company income tax. We have the petroleum profit tax, which is payable by petroleum companies. Income on tax on mining activity, stamp duties, value-added tax. The Act contains all of the taxes. And so now, depending on what you are interested in, if you want to know what tax you are liable to, you go to the Nigerian Tax Act. If you want to know how to compute the tax, you go to the Nigerian Tax Act. If you want to know who to pay the tax to or who is responsible, you go to the tax admin, the type of returns, and so on. So it's much more straightforward now for you to, ascertain what provision of the law applies to you at any point in time, and so on.
Now, the increased exemption threshold for companies that increase capital gains tax, I'm looking at how this affects individuals and how they will be taxed respectively.
Exemption rate?
Yes, I'm talking about the increased exemption threshold for companies. Now, there is a little less, the increased exemption threshold for small companies and increased capital gains tax rate.
Oh, okay.
Yes.
Yeah, so the exemption, the threshold for exemption from tax is, what we used to have is 25 million for small company. We're hoping that that is increased from versions of the law that we have seen. And if that is correct, then it means that if your turnover as a company is within that threshold, as a small company, then you are exempted from paying tax. Income tax. That's one. Income tax. Two, you are not exempted from paying VAT, but you need not file returns, which means you are not expected to do the monthly returns filing that other companies will do. But of course, that also means that if you have suffered or you have paid any VAT, you will not be able to claim the input VAT, because if you don't file returns, there's no basis for you to claim. So you are going to find out that some small companies who are still within the threshold may opt to even file VAT returns. But the most important thing is that for companies that are still within that bracket, they are exempted from several obligations that are applicable to medium and large companies.
Now, the CGT on indirect transfers of shares in Nigerian companies. I want us to make us understand what it means for sales of shares now by Nigerian companies. What are the basic changes here? Because I spoke to a stockbroker and he was so excited about this on Friday.
Okay, so let me start. When it comes to capital gains tax now,
yes,
it is treated like any other income.
Okay.
Which means if an individual disposes of an asset and make a gain, it is taken as the income of the individual. And the tax rate that will be applicable is the tax rate of that individual. So depending on your threshold, depending on where you fall on the tax table of rate,
okay,
you know our current rate now is 0% for the first 800, the next 2.2 at 15%, 18%, 21%, 23%, and 25%. So depending on the tax rate where you fall, the CGT rate applies. So for individuals, you will be using the tax table. For companies, the company tax rate will apply to that gain. For petroleum company, the only exception is that they will be taxed like any other company at the rate of 30% instead of applying the petroleum profit tax rate of either 50 or 80% or 30% as the case may be. So that is the context, the change that has happened as far as capital gains tax is concerned. The old rate of 10% for all gains no longer applies. You apply the rate that is applicable to the company, either 30% or individual rate. Now, when you talk about the exemption for sale of shares, now, when you sell shares and the proceed is more than 150 million. Okay?
Yes.
It's not more than 150 million.
Okay, not more than 150
million. Yes,
million.
the proceed is not more than 150 million. And the gain on that disposal is not more than 10 million. It is exempt.
Okay.
Yeah, but where it is above that,
yes,
either more than 150 million or the gain is above 10 million, then it is liable to tax, except that proceed from the disposal of those shares is reinvested, in another company in Nigeria within that year. Then you will get exemption from capital gains tax. So if you are one that trades in shares, okay, or you invest in share and you sell it after some time, if you reinvest within the year and you don't, particularly for foreign portfolio investors, if you don't take the money out of the country, you invest in other shares, the gain is what? Is exempt if it is above that threshold. Then the second question you raise is about...
no, it's about the shares for Nigerian companies and what the basic changes in the entire thing. Okay. You've answered that. The PIT is what, again, I want us to talk about. That's the personal income tax. Yeah. I think Mr. Udele was talking about pro-poor. And Nigerians have been taking that aspect of the law, saying those earning 800,000 and less per annum will be exempted from tax on their incomes and gains, while income earners will be taxed at higher rates up to 25%. Can you help us also understand that and how really this is pro-poor? Okay.
So the current provision, or maybe the tax table, is such that if you are a minimum wage earner, in fact, if you look at the details of the law, under the exemption from tax, if you are a minimum wage earner, you are exempted, okay, from tax. And that is tailored to be able to capture those who are earning, that range. Again, if you look at the tax table, the first 800,000 of your income, if you earn 1 million, okay, the first 800,000 of that 1 million is exempted from tax. So it is only the difference that will now be taxed on the next tax table. And the next tax table, the applicable rate is 15%. So if you earn 1 million and you take 800,000 out, you have 200. You apply 15%, it means there is a 30,000 to be paid for a whole year. Okay, so depending on your earnings bracket, the tax rate is reduced, if you don't earn above 4 million, let's say 3.6. Okay, so for those who are earning below, from 3.6 and below, and you don't have other deductions, we have other deductions that are available. For example, if you are a tenant and you pay rent, okay, and the amount of rent is you are eligible to claim a maximum of 500,000. Okay. But there are conditions attached to it, which means which is you must be able to disclose to the tax authority how much you have paid as rent, so that the landlord who received the rent can also be subjected to tax. If you make that disclosure, you get maximum of 500,000. So which means if you earn 1 million and you pay rent of 500, okay, you get 800,000 plus 500, which is already more than your income. So you'll not even be liable to tax. That's what it means. So that additional 500,000 gives a reduction in tax for all taxpayers who earn 20 million and below. So if you earn 20 million and below per annum, and you are eligible to claim the 500, in addition to the first 800 being exempted from tax, automatically your tax rate will reduce compared to the old provision. In addition to that, there are other deductions. If you make contribution to pension, okay, that is also going to be reduced from your income before it is applied, before it is placed on the tax table of rate. If you also make payment for, maybe you take a loan to build your own house, owner-occupier residential building, okay, you are eligible to claim relief on that. Again, if you contribute, maybe you have HMO, the health insurance, or you even have insurance on your own life, okay, you are also eligible to take those deductions from your income before you apply the tax rate. So definitely for those who are earning below 20 million and below, automatically the tax reduce. But after that, what we have is an increase in your tax if you earn above 20 million.
You already talked about the Ombuds's office and what that stands for. So I don't know, maybe you still want to touch on that. But my next question truly will be the VAT zero rates on essential goods and services. My question really would be, now how does, how do we address the impact on business, those selling those goods and services? How do they recover their VAT costs?
Okay. So what we used to have, we used to have VAT exemption. Yeah. We also have the zero rated that you talk about. So if you are dealing in goods that are exempt, I just want to make comparison.
Yes, please.
If you are dealing in goods that are exempt, what it means is that you are not even required to file VAT returns at all, which means if you are paid any VAT or you suffer any VAT, you bear it. You cannot claim refund. But this new law has moved a lot of those essential items from exemption to zero rating. Zero rating means that when you are selling, you charge VAT at 0%, which means if you sell and you charge at 0%, that becomes your output VAT. In the course of buying what you are selling, let's say you are selling a phone, for example, and you bought a phone for maybe 10,000 naira, okay? You will have paid VAT at the rate of 7.5% on that phone, which is called the input VAT. But because you are selling a zero-rated item, sorry, phone is not a zero-rated item. Let me correct that. Okay, it is food. Let's say food. They're selling rice. Okay. Raw rice like that. Not that you go to a hotel and eat rice. You are not eating ordinary rice. You are eating all the ambience and so. Yes. So you go to Mama Put to eat rice. Yeah. Okay. And of course, maybe in the course of the seller, they bought some items that are vatable. Not all the ingredients may be totally exempt. They bought some items that are vatable, which means they have paid VAT one way or the other. Okay, but when they are selling, they cannot charge because it is what? 0%. It means you have zero output and you have so much as input. So that input is what you will have to make claim to the tax authority to for refund. Okay. So the only option available for zero rating is that you are eligible to a refund of tax that you have paid. Okay, and of course there are provisions in the tax admin that says that when what you are claiming is just a refund of VAT, audit and all the difficulties that accompany claiming refund will not be applicable. Okay, so it's something that will be processed. They put a time frame within which it must be processed and you get your refund, just to make life easy for the low-income earners and for the poor.
Now, let's look at the status now. Tell us about the status of the nuisance taxes by states and local governments and what is really being done about them. I think the public would like to know about that.
Okay. You're referring to the nuisance taxes and all that. Okay, so, you know, at one of the main slogan of this committee is the idea that the taxes will be reduced to even number, I mean to single digit. All right, so which means we hope that, and we expect, it was expected that all of those nuisance taxes, we call them nuisance taxes because they are more or less unstructured, they are covered under, most of them are under the miscellaneous taxation provision decree of 1998, where a list of taxes collectible by state, federal, and local government are listed. Some of them are not even listed, but they are still being pursued. Okay, so you know that some of those taxes are neither on the concurrent or the exclusive list. They are outside all of those, which the National Assembly can legislate on. So they are totally under the control of the subnational, the state, and the local government. And therefore, the state have more power on them. And so they're still there, more or less, okay? But there is the understanding that if the reform, the way it is now, goes very well, and the state authorities, if they are convinced that what they stand to gain with all the reform that has taken place, okay, they will find a way to get away, I mean, do away with all those nuisance taxes. Remember, they are not things that the National Assembly can just legislate and cancel or just make a law. Some of them even require a constitutional amendment, which the committee has also been engaging with the relevant authorities, I mean, the state governors and the local government. And so it is also clear that most of those nuisance taxes are empowered or sponsored by the state government. They're the ones that employ those youths blocking the road and all that, or maybe local government. I mean, as far as they are concerned, is their constitutional right. And so except there are amendments to take them out of those in the constitution, you cannot just, you know, eradicate them. But that engagement is ongoing. It's part of the second phase of this program to ensure that all those taxes are better streamlined and reduced further, and then only those that are genuinely required. And of course, there is no compulsion to collect them if the state government said, I mean, you don't need to. Okay, we know that even the state government and the security advisors, you know, there are things that they have had engagement on, because some of these things have security issues, and therefore in the last meeting that they had, it was an agreement. There was an agreement that some of these nuisance taxes will be done away with. So we believe that that is also in the right direction.
Well, I must thank you so much, because even for me, I got more clarity. I'm sure our viewers too must have got some more clarity about this. And like you said, we'll be taking this bit by bit. Mr. Albert Folorunso is the managing consultant with Creston Pedabo. They're speaking on full details of the Nigerian Tax Reform Act. I must thank you so much for starting the week with us on Business Nigeria. We really took this a bit far for us to really get the best of it, but I know there's still more you have to give us.
Definitely.
Thank you so much for your time.
It's my pleasure.
We can thank you so much for being a part of it. Get busy and always make the cash. I'll see ya.